Hi, folks. This is Gettess with the market sense for the week of January 5th, 2011. Happy New Year, everybody, and let's see if we can make sense of all this stuff. The charts we use are from the Trade Navigator software by Gettess. Wouldn't know how to do my job without it. In the bond market, we have a rather interesting situation here, I think. They could go all the way back up to the highs, so let's get that out of the way. That's a possibility. But we have much more immediate possibilities that we're dealing with here that I think are interesting. The previous lows that they broke down from, right in this area here, let's just call it the 124 area. That's one area that they could go back up to and then turn back down, so they're setting up to where it looks like maybe next week this middle Keltner channel would be down in the same area as that 124 area. So that's a very interesting area to me. It's possible that they could go up there and then turn down. The other possibility is that they won't be able to get back to those old lows, in which case you have to assume the market is even weaker than just a normal trend. They should get back here if it's a normal downtrend. If they can't even get there, they may be even weaker than that, and we could see another real plunge to new lows here. That would probably be a divergent low, but at any rate, that other high, if they can't make it back to these highs, could be right around this blue line, which is the 123.05 area, or it's possible that the high that they've made so far, which is I think 22.05, and this line's 22.06, so right in this red area, that could possibly be all they do, and the lower they hold, the weaker you would expect the move down to be. We have support under the market at 120.04, and even down here at the red line at 119.12. Both very possible to reach this week, but I really think the greatest likelihood is to see them work a little higher, possibly have trouble in this area or not be able to get to there, and then turn down again. In stocks, we have this sort of relentless opposite of Chinese water torture as they just grind higher and higher and higher. They gapped up to start the year, but they're not really showing much explosiveness there. They're still just sort of easing their way higher. This is normally not the way we see tops come in. They did kind of come in like this back in the April-May time period of 2010, and it's pretty unusual to have two tops look identical, one right after the other. I think they look like they want to turn down from here, but I don't think that necessarily means that the game is completely over. I mean, I think they'll turn back down and then try to go to new highs again. Right now, there's really nothing in the way of resistance above the market. I mean, there's always resistance. We could find something, but they just look like they could go higher if they try to go higher. But they look like they may not want to. The red line that you can see below price, and this happens to me all the time, I can't see my cursor at this moment, but the upper red line, which is still below price at this point, is the 1252 area. That would be normal for them to go that low, even if they're still trending up strong. And they even have support where the blue and green line converge there, which is the it's 1245, 1247 roughly. Even that would not indicate any major problems in the market. That would still be support to an uptrend. They would need to break below 1235 to make me think that anything of any magnitude is occurring. And of course, we have these old highs back here from November. They could dip down to this area and turn back up from there. And again, that would just be a normal move in an uptrend, not anything indicating serious problems yet. So that's what we're looking at today. I hope you can find something profitable to get yourself into. Welcome back to 2011, and let's see if we can't try to do this on a somewhat weekly basis. Thanks.